Ethereum emergency update. Are we going to see a correction that's going to match 2017 to that 85%? Or have we reached a pivotal low? Well, I have the technical high probability answer for you today using momentum and time. And we are also going to continue the follow me on Binance Coin BNB day number 14. We are now risk-free on that second position. I'm going to cover that in detail. And there's a nice compounding opportunity based on logic, objective, non-emotional thinking. All right, if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Chigir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro, featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in, starting with Ethereum. All right, so here's a pattern position of Ethereum. So we're going to do a few things. First, I'm going to pop out of this chart, and we're going to go into the weekly chart. So I have a weekly chart in the top left-hand corner, and I'm going to focus on the momentum position. Momentum pretty much measures the rate of change. So it's literally acceleration and deceleration. That's what we're looking at. And what do we have right now with Ethereum on a weekly chart? Something quite special that we need to pay attention to. One, the fast look-back period is clearly oversold, and it looks like the red line or the blue line is going to go over the red. And we have the second indicator also in the same position as well. So what does that tell us? What that tells us is highly probable that we're going to see a major low, that Ethereum's, the momentum is going to be sideways to up for maybe 3, 4, 5, 6, 7, 8, 9, maybe even 10 weeks. We want to pay attention to this. So we're looking at the technical position based on the psychological mood of buying and selling. So it's pure technicals that we're doing here. So that's one. That's a good indication. And remember, it's an indication, not a guarantee. So because we can only do probabilities and never certainties. Then we're going to look at, back on the daily chart, we got this pattern position. Now, we don't need to get too anal about the pattern. There's a couple of things I want to cover with you today, but we will factor in what's the highly probable pattern. And it looks like we might be coming towards what looks like to be a pretty clean major A, B, C zigzag correction. A, B, C zigzag correction. Now, it may unfold to be something different, but taking the momentum into consideration that we just looked at on the weekly chart, combined with this, this is the logical, most probable outcome that we're going to see. Now, what comes after an ABC correction? Well, it's a continuation of the former trend. Right? So that's what we're looking for. But is momentum and pattern enough? No, we're going to add in now something called Fibonacci time ratios. And there's a couple of things I want to run by you today to add to our thinking and thesis. So let's just now just zoom in a bit more to this part of the market. Let me just get rid of this. All right, so most people don't realize, you might be familiar with Fibonacci price, but now we're going to look at Fibonacci time. So what we're going to do, one thing we're going to do a Fibonacci retracement, taking this low, the beginning of this potential wave over here, taking this high, and just like with price, most corrections, ABC corrections, end from a time perspective between 38.2 and 62% time retracement. So now we've got these two vertical lines that tell us this is the typical minimum correction time. And look, Ethereum is quite close to that date, right? 27th of June. So we're in that month now and we're approaching that. So now we've got this clean A, B, C pattern approaching the minimum typical time for a correction. But can we do better than that? Well, there are some other time factors which are very, very powerful, and it's going to become really, really clear to you once I do what I'm about to show you. Most wave A's and wave C's, similar to price, often equal each other in time. How long does it take for that wave to unfold, and how long does it take for the next wave to unfold? So we're going to look at that. We're going to actually measure it. And literally what I'm going to measure, just so you're clear, is how long in time did this take, and then project it forward from here, and we're going to get another vertical line. And if it clusters over the retracement, that makes it an even higher probability time zone. That's what we're looking for. We're looking for a high probability that marries up. So now what we're going to do is I'm going to take this high to this low. I'm measuring the time. It's going to get the exact point, and then I'm going to project it forward. It's a time extension. I need to change the ratio. The ratio that we want is the 100%. And you can see it falls right next to the minimum time retracement. So now this makes it a highly probable zone. But can we do better? Well, I'm going to do one more time factor. One more time factor. We're going to do something called a low. No, actually, I'm going to do two more. There's something called a high to low rhythm zone, which is the typical regular maximum for the next low. I'm not going to go into too much detail. You just see where the line goes, right? We're going to go low, so high to low, and you can see it's in that zone. So this is telling me that this is a very highly probable time zone. There are a few other time factors we can do with some other rhythms about these lows and everything else, but this just tells us we've got momentum on the weekly. Both, there's two look back periods that are both either oversold or looking bullish. So that gives us a huge clue that the downside movement should be limited. Now we've got this time ratio. Fibonacci time is so powerful. We've got a date. The date period is literally the 1st of June and then to the 28th of June. So it's like a 3-week period that we're saying we've got this information, which is powerful. Now what I'm going to do and finish on is add in some Fibonacci price analysis. Now this low down here is actually quite close to the low back in 2017, early 2017 bull run, the beginning of it. So I'm just going to use this low to take this high and do a price retracement. Because I had someone in my private community. So anyone that's purchased one of my courses, I'll show you my masterclass, but I also have Fibonacci Elliot Wave courses that break everything down in detail. You get an invite to my private Telegram, and we do some private workshops on the weekend where we go into a bit more detail. But someone this morning was asking, what's the opinion on Elliot Wave, and I'm just expressing my technical viewpoint. We're not looking at fundamentals, we're looking at purely the technical position of Elliot Wave based on momentum, pattern, price, and time. So we've done time, we've done momentum, we've looked at pattern. We haven't gone into too much detail, only 2 wave counts, or 2 degrees of counts. And what I mean by that is we got a wave 2, and then we got an A, B, C. That's 2 degrees of wave counts. And we've got time and momentum supporting that this is likely in this range over here somewhere. We're going to see a low, major low. Is it going to end up being a correction like this, or is it going to be a continuation? We don't know that yet, so we have to let the market unfold. We can only go by what we know so far. So now let's just finish up with some price analysis. So I'm just going to take this low over here to this high, and the typical wave 2 corrections are between 50, 62, and 78.6%. So what is this ratio here? It's 62%. That's the golden mean. It's right there. It's in that zone. So let's just get rid of these two to keep the chart nice and clean. This also supports our case. Is that enough? No. We also want to measure how much this wave A moved down, project it from here to also project this down from here. This is called a Fibonacci price extension. Just going to measure this. 2 key ratios. The typical minimum wave C is 62%. Most common is actually 100%, which is down here. But because it doesn't cluster over, the 62% is more highly probable. So we can get rid of the 100. And then we're going to do one last one, which is called the external retracement. We can take this low to this high. This over here, wave B has a relationship to wave C. And the relationship from a Fibonacci perspective is 1.618 and 1.272. And you can see it's right into that range. Hopefully you can see that. So what we have now is a very high probability momentum, time, price, and pattern zone. And it is a zone. Now if Ethereum breaks further down to the downside, then we'll bring those other ratios back into the equation. But right now it's looking like we might be in a pivotal point for Ethereum We ideally want to see a swing high get exceeded. These are the swing highs. This one will be the crucial one. This one, these will be indications that the market has reached the low, but this one over here will be a confirmation, right? A confirmation. And then that is the viewpoint of Ethereum. Do you agree? Do you disagree? What do you think? But what we did was objective. That's the main thing, is we just looked at the momentum on the weekly. We looked at pattern on 2 degrees on the daily. We looked at time, Fibonacci time. We did retracements, extensions, time extensions. And we also did something called a high to low, typical maximum of a particular part of a correction. I am going to bring out some new stuff with Fibonacci time because it's very, very complex, but I've simplified it a lot. So I'm going to help you out with some of those. So there you go. That's Ethereum. All right, now let's jump into the BNB follow me. So we've been doing a follow me on Binance coin for the last, today's day 14. And in 14 days, we've had 2 trades set up. So we had to be very, very patient. And just to quickly recap is we started over here. The date was roughly, what was the date? It was a bit further down here. Something like, 25th of May, thereabouts. And what we said was, over here, we had a trade opportunity. We shorted the market over here, and we made some really good profits. We got stopped out here and here, so we made some really good profits. We've been very patient for a nice A, B, C correction. We went short again over here with a stop loss up here. We moved our stop loss yesterday. So now what we're going to do is we're just going to look at the market. Literally right now, it looks like my extra position just got triggered, and I'm going to talk about that in a second. So what do we see right now? All right, so what happened yesterday is the market triggered our order, which was over here. The market did move down nicely, and from a logical Elliot wave standpoint, we said we no longer need to have our stop loss over here. We've got reasons to have it over here, which is more that is the extreme of something called a wave 1. So now what we are going to do is the following. What does this look like as it's unfolding? We're literally just following this day by day. This is a 4-hour chart. What does it look like that is unfolding? Well, can you see it looks like some type of wave 1, looks like a wave 2, nice wave 3 where we got triggered into our trade. It looks like an A, B, C of a 4, and it looks like we're probably going to get a continuation to the downside. So let's just pop out of this chart for a second. Go into the top right hand corner where my daily chart is. The momentum on the daily is still bearish. This is the second day it's been bearish. So that's good. That's good for our short position. That tells us we should still have 1, 2, maybe 3 days of sideways to down. That's the probability. The momentum is on the downside. The rate of change is on the downside. So we should anticipate and go with that as much as we can. That helps us. Then going back to the 4-hour chart. I normally trade weekly and daily charts, by the way. I'm getting to the 4-hour chart and sometimes the hourly chart, just because there's more information and there's more frequent trade opportunities, but more for the shorter term swings. So what we're going to do today is a couple of things. One is we've got the next bearish reversal on the momentum indicator. That tells us, because it's combined with the pattern position, it looks like a nice wave 1, 2, 3, a nice clean A, B, C, and a movement to the downside, which is now overlapped into this. I'm going to talk about this because, and a quick caveat, don't worry about missing this trade. You know, some people are like, oh, I missed this trade. There's hundreds, if not thousands of trade opportunities. And if you miss your train, you just patiently wait for the next train. The next train's coming in 5 minutes. It's coming tomorrow. It's coming in 3 days' time. So what I would love for you to take away from this is the logic, the method behind the madness, where you can be consistent in your approach in a non-emotional way. We got a business plan, a trade plan, and we follow that plan. So I'm just going to move to a line chart because sometimes it's a bit easier to see what we're talking about in terms of the pattern position. Here we can see a nice clean, what looks like to be a nice clean A, B, C style correction. Let's just change that to an intermediate wave count is fine. Okay, if this is an A, B, C correction, what's the first major indication that this wave C is likely to hold? Was actually the price overlapping into the wave A, top of the wave A, which is just done on if we go back to the bar chart, you can see it just hasn't closed into that range yet, but literally as we're speaking, literally going into that range right now. So that gives us good confidence. Another thing to take into account is what I'm seeing here, just as a very short term, but also the lesson here is that what we're seeing as a pattern unfold on a 4-hour chart, you will see time and time again on a daily chart, on a 1-hour chart, on a weekly chart. So it applies to all time frames and all markets, especially cryptocurrency, because the psychology is much more raw and it tends to express itself more clearly in these typical ABC zigzag style patterns and so on and so forth. So don't worry about missing this trade. That's called FOMO, fear of missing out. No, we want to rise above that and just go, what can we learn and how can we apply that to Ethereum, to Bitcoin, to some of the other cryptocurrencies that you're looking at, where we're not just diving in eyes closed, we're literally eyes wide open and we're seeing what's likely to occur 2 steps ahead. So what we're going to look at over here as well is, it looks like to be some type of wave 1, wave 2, wave 3, potential wave 4, and some type of wave 5 unfolding. Again, I'm just going to change that to intermediate. I'm just going to pull up the lines. The reason I'm showing you this is you'll see that I've got these 2 price retracements over here. And the reason I got that is that's the typical wave 4 price retracement and that we've overlapped. So the price, if this is what we think it is, well, it looks like an initial 1, 2, 3, 4, and this is a 4, and then we're overlapping into the wave A, and we should assume that the market's going to go down. That's what we're saying. So there's no reason no longer for us to have our stop loss up here. We can actually adjust our stop loss to now break even and risk free. Now we don't need to go too close. I'm just going to put it as the entry. So whatever our entry point was, which is what's reflected by this green line, is now where our stop loss is. So what that means, this is a beautiful place to be, where if the market goes on to do this, which is a possibility, not highly probable because the daily momentum's down, the 4-hour momentum's down, the pattern position is down, we've had an overlap, which is a signal that and an indicator that the market's likely to continue down. But we need to be fully conscious that there will be times, without a shadow of a doubt, if you're trading consistently over a period of a year, 2 years, 5 years, where what I'm seeing with the blue arrow will happen. And we can't, it might be a crazy news announcement that we have no control over, or something happens, and a world event happens, or it's just a micro piece of news because we're on a pretty small time frame, on a 4-hour chart, and we get stopped out. That's okay. And that's a part of the business of trading. Stop losses to break even, small profits, small losses, because we have to consistently play the odds to really ride the wave. So we need to be aware of that as well. So even though this is unfolding textbook, we don't want to get carried away with ourselves, because we always want to be aware and think that there's always going to be a time when this happens, and it's best practice to assume it's going to happen. So then you can really, really manage your positions like a professional. It's capital exposure, capital preservation is what we're really, really focused on. Yeah, because we haven't exited up any position. We've got 2 positions here, and they're both risk-free. Next, what I'm going to talk about is an opportunity. Now that we're risk-free, yeah, an opportunity to compound the position. We're now risk-free, meaning we haven't got that 3% capital exposure no more. It's literally 0 capital exposure, because if we get stopped out, we break even. So it means we can also now look at another trade. So is there a logical trade setup based on what we're seeing right now? The answer is yes. I've already put in my order a few hours ago, because I only look at the charts once a day, which is typically in the mornings. And I just, with a 4-hour chart, there's only 6 bars a day. Literally there's 6 new bars every day, 6 new bars every day. And there's normally nothing to do for the next 23 hours. So you just wait till the next morning and you go, right, is there anything? And again, if the train leaves the station, we just go, don't worry about it. It's going to be another one tomorrow. whether it's going to be in Binance Coin or whether it's going to be in Solana or whether it's going to be on Ethereum, there's always going to be another trade. We'll always know that as well. So what would be a logical entry to, is there an opportunity here, information that we can leverage? Well, there's a pretty clean, what we can see here, ABC correction, right? And I'm talking slowly, not because, more for the benefit of getting the lesson across, right? We've got this ABC correction over here. Now, let me just move this like this. Sorry, let me just get rid of this. I just want to clean this up a little bit. Right. Just seeing the best way to show this to you. I'll keep it on. I'll keep it on. What's the cleanest? Yeah, it might be easier if I just keep it on the line chart. We've got this ABC correction. Now, the first signal, well, there's other indicators as well, but on this time frame, that this wave C is likely to hold is the overlap. That can also be a trade entry, right? So if the market overlaps into wave A, into the closing range of wave A, we can enter a position to go short and add to our position with a stop loss just above what looked like to be a potential wave 4. Is it going to hold? We don't know that. What we know is the momentum on the daily is down, which is a good thing for shorting positions. We've just had a bearish reversal on the 4-hour chart. We go, okay, we've got a very clean A, B, C in the typical price zone. Let's look at some time factors. So we look at some time factors. Okay, well, we can measure this high over here, which looks like a wave 2, to the end of this wave 3. And the most common ABC corrections end in 38 to 62%. And you can see that we're just beyond the extreme over here of this. So that tells us we're at the extreme of the typical 62% time retracement. Right? And time is such a powerful factor, and you ideally want to add that to your trading strategy because it's very, very powerful. What else can we do over here? Well, we can also measure this wave A low. Let me just make sure I get the low. I'm going to take the closing price. This is the low here. Low to this high, projected from this low, and I'm going to take the 100%. So we're basically what we just did there, similar to what we did with Ethereum, but on a smaller time frame. So on Ethereum, we did it on a real macro time frame, like with years of data. Here, we're doing it on literally hours or days worth of data. Because we measured the wave A, projected it forward from wave B to see the typical time that a wave C would normally end, and it's the 100%. So you see that line that's appearing and disappearing? That's the one that we're focused on. And look where it is. It's literally at the peak of what we're talking about. So that gives us good reason to believe, high probability, we're at the extreme of the retracement and literally on the bar of a typical ABC correction. We'll do one more. Let me just think. I want to do one more thing on price. I want the intraday data, so I'm going to go back on bars. Now, by the way, guys, I'm going into a lot of detail here. This is very high level, simple, because we're going to repeat the same thing over and over again. But if this is new to you and you haven't heard about Elliot waves and Fibonacci, I've actually got an Elliot wave and Fibonacci masterclass, which is in the link below, and it covers the breakdown of wave 1s, wave 2s, the relationship, the Fibonacci ratio relationships, and I've simplified the heck out of it, so it becomes practical. So when we're talking and doing these videos, you'll get with the program. You kind of get what I'm going on about and how you can apply it consistently to most of your portfolio, because around 50 to 70% of the time, these patterns are really, really clear. So the masterclass is in the description link below. You'll take it, you'll see this page, and you'll get instant access. Just click yes, show me how. It'll say bang, away you go, Bob's your uncle. So that's what we're talking about over here. So I'm just going to do, the reason I refer to that masterclass, I'm going to cover a key ratio here. It's called an ABC zigzag, and we're going to do something called an alternate price projection, also known as a Fibonacci price extension. And what that is we're going to measure the low to the high of this wave A, and we're going to project it forward from the low of this wave B, and the ratio that we want, the most common one, is 100%. You see where it falls? So now, what do we have? Similar to Ethereum, but on an hourly time frame, we've got this cluster on time. We've got a cluster in price. We've got a pattern position, which is ABC of a wave 4. We've got momentum on the daily and the hourly. And we've got a signal, a pattern signal, that the price is trading into the range of wave A. That's a clear signal that this is likely to hold. So now what we can do, and I'm talking slowly because I know if I talk fast and you're not used to this, it will fry your brain. So now what can we do? In fact, let's do it like this. Let's do it like this. I'll just keep the chart like this, so you can see it as clearly as possible. Is what we're going to do, I've already done this, is we're break even on our other position, and we're going to open up a totally separate position. We're going to say if the price, I'm going to go here, closes or even trades in this range, I'm going to change the color to red, and we'll make it, yeah, that's fine. I'll make it a little thicker. If it goes below this, in fact, I like to use green as the entry. We go great. Yeah. I want to go short. So you would have been triggered short already if you had the order in. But again, this applies to daily charts. It applies to weekly charts. It applies to other cryptocurrencies. So here, focus on the logic that we're talking about here. And then we're going to put a stop loss one tick above this high over here. Right, so this is a pretty tight stop loss. This is a pretty tight position here. You know, that's also going to represent 3% risk. So it means if the market does this and then instantly does this, which is always a possibility, we lose 3%. Right? That's the name of the game. That's trading. It's the art and the science of trading. So what we're going to now finish on is, what do we anticipate to happen? How are we going to manage this position? Well, we anticipate that we're likely to get a wave 5 like this. It will probably look like, and we can do some wave 5 analysis as well. Now we've got more information. We're going to make the assumption that this wave C or wave 4 is going to hold. If that's the case, we can do some price analysis for the highly probable end of wave 5 for just this initial move to the downside. And this is just for our insurance position, our first unit, a half of our position, just to get risk-free and lock in some profits. So then whatever happens, we go, it's a profitable trade. Now always keep in mind, we can do some high probability price analysis in just a second, but the price can always go a lot lower. So we always want to have a stop loss management methodology. All right, so what we're going to do, I'm going to keep it simple and we're going to finish on this, is we're going to do an external retracement. We're going to measure wave 4, high to the low to the high, should I say. And these two bars come in. I'm going to actually now delete all these other lines, right? Because these are now, we don't need this. We've used this already. These are all, yep, that's fine. We don't need this either. Yep. So that's fine. So I like to keep my chart as clean as I can. So it's very, very easy for me to see what's happening. Now we're also going to measure the beginning of this wave, the end of wave 3. This is one of the most powerful, most common, most typical end of wave price targets. I covered this in the masterclass as well, by the way. I do. Yeah, 38, 62, and 100%. Now the 38 and 62 are the key ones that we want to see. But look at what we've got. Which one coincides with the others? Well, it's this one here, the 62%. So we can get rid of this one. And this is the highly probable zone that we have. We can do a few other things as well, but I think that's more than enough to go, okay, if price approaches this range down here, on this new position, we want to at least be risk-free, and then we can manage everything else thereafter. So we can look at that clearly nearer the time. So there you have it. All right. So I think that's all I need to cover with this. So yeah, BNB is unfolding really, really nicely. So now think about it, right? We've waited 14 days, and there's only been 3 trades. and we've been very patient. So it's not about trade volume, it's about quality. We want quality, momentum, pattern, price, time setups, and sometimes you just need to be patient. So it's not just about jumping on any train, it's about waiting for the right train, the highly probable train that's going to get you to your destination. We don't want trains with, I don't know, wheels missing and, I don't know, crazy drivers or whatnot. We want to go, right, we want the clean trains, they look solid, they got a good brand, good reputation, and there's high probability that it's going to get us to our destination. And that's how I like to think about this. So we had one trade set up over here. We rode this wave. We waited patiently. We're now riding this wave. And now we're compounding this wave over here. How is it going to play out? We don't know. But we can only play the odds and do it consistently. So if you like today's video, like, subscribe, hit the bell notification. Take the Fibonacci and Elliot Wave Masterclass. I'm telling you, I absolutely love it. It's incredible. I put a lot of work into it so you can make it practical and add quality to your trade strategies, because we want consistency over a long period of time. Let's finish on a quote. It's a relevant one today. It's Confucius. Confucius, the wise guy, he says, it does not matter how slowly you go as long as you do not stop. The reason I provide a lot of training is because it gives you the value, but it's about repetition. And it's about putting into practice. And can you spot ABC corrections? Can you combine that with momentum? Can you do some Fibonacci time retracements and time projections and Fibonacci price and do they all coincide? And ideally you want maybe 2 out of the 4 or 3 out of the 4. And in ideal such situations, 4 out of the 4. Momentum, pattern, price, and time to all coincide. If they do, then it's not just about jumping in with like this. We want a signal. We want a nice clear signal to say, okay, it looks like it's coming towards the end of a correction or an end of a trend, but what will signal to us that that is unfolding? Right, let's be patient and wait for that. So the compounding position today, it was the wave A overlap. If the price goes into the range of the peak of the wave A, that is a clear signal. All right, well, we can actually use that signal as an entry point. So it reduces the risk of us getting it wrong. Doesn't guarantee, but it reduces the risk. So we're gonna wait for that signal. And it means you might give up a bit of movement in the price, but it means there's a higher probability that it's gonna unfold in your favor. And that's the art and the science of trading. So join me tomorrow. We got day 15 tomorrow. Day 15 on follow me on Binance Coin. Let's see how this compound position unfolds. Do we get risk free? Do we lock in some profits and so on and so forth? We'll just, again, let it unfold in a logical, mechanical, non-emotional standpoint. And we'll also talk about the profit wave, which is the second half of our position, because we want to keep more of a distance with our stop loss for that and let the trend unfold so we can ride the Elliot wave. Like a surfer, we're going to ride that wave until the end of its trend and then review the market. All right, like, subscribe, hit the bell notification, and I'll see you tomorrow for day 15 on Follow Me on Binance Coin. See you then.